Hi friends, Simit here from InformedTrades.com. Today is June 24th, 2014. Time for our daily Forex chart review. Basically, in these sessions, I share the trades I'm placing, adjustments to existing positions that I have on the markets, all as a part of helping traders learn. My style of trading is price action swing trading in the Forex market. Of course, if any of the information I'm presenting is unfamiliar to you, if those words themselves are unfamiliar to you, check out InformedTrades.com. We have a huge archive of learning material covering not only the methods that I use to trade, but many other styles of trading, many other markets. Check it out. Set up a practice account. Share your knowledge. We can all sort of learn together. Okay, let's get right into it with a look at the charts. Here is a look at the chart of gold. Gold has performed well over the past few days, ever since we had our big breakout right here on June 19th. Price is now, excuse me, price is now above the 50 simple moving average and the 200 exponential moving average. Price a couple days came down and tested the 200 exponential moving average, bounced off that. So these are all really good signs for the bulls. Of course, I am a bull long-term gold. I'm still actually kind of wish that it stayed a little lower because I'm still finishing up accumulating when I've been accumulating for the past 6 years. I'm finishing up accumulating. I do think we'll see new all-time highs, considerably higher in gold over the next few years, next 10 years, let's say. So for those who are patient, looking at it for the long term, I do like gold for a long-term perspective. That's sort of where I'm looking at it from. In terms of the short-term technicals, the bulls still have to conquer 1326. That is a major level. In my opinion, if we can close above 1326, I think that would pave the way for a potentially quick move back up to 1380. Not much resistance on the way. There's some resistance here at 1350. Of course, if the bears make a strong showing here, that could validate this whole rectangle, and we could find ourselves back at 1280 or 1270. But we'll see. So far, the bulls, ever since this day here, June 19th, have really gained the upper hand. That is gold. Bitcoin, not much new. We're still consolidating. We are a little bit below this trend line, although really with Bitcoin, it's probably more useful to look at the logarithmic trend line. Oh, in that case, we're definitely below it because the price is so volatile. So there's the regular trend line. There's the logarithmic trend line. We're still in that vicinity. Are a little below it. The 50 has crossed above the 200 exponential moving average, and we did find support at the 50% Fibonacci retracement. This is around where I enter right around here at 530 or so. So not much new here. I still think it's pretty bullish so long as this level is maintained, technically speaking, that is. Now, euro dollar, I did short this yesterday, and I shorted so this position is a little out of the money, not looking as well as I would hope. Today's candle is a little more bullish than I would have expected, or than is favorable for my trade. And this trend line even though we broke it below, it looks like it's getting some validity here. Validation here. However, we're still in the vicinity. It's really a cause of concern if we break above this high here. We're still at the 200 exponential moving average. So we'll see. I'm short at the black line. Stop is at 36.50. Target profit 36.10. I am also short euro yen. And that's also not looking as well as I hoped, but it's still early. We're still close to my entry point, so it's definitely not quite time to throw in the towel yet. So we'll see. This one, what's a little more concerning is we have a new high established on this one. Today's high is higher than the high on June 19th, and that to me is so I'm a little more concerned about my euro yen position and about my euro dollar. Both are not in the money yet, so that's always not as much fun as when it is in the money. But we'll see. Still not too late yet. Nothing really to change about or do it here. Just sort of wait. Let's see what happens. I did put on a new order today on pound Aussie dollar. Excuse me, pound Aussie. This trade is also documented on my blog on InformedTrades.com. Basically, I'm set to go long at 80.20. That's where the order to go long is. My stop is at 79.70. Target profit 8,300. So risking 50 pips to gain 280, which is a 5.6 reward risk. This target profit is a clear resistance. We had that established on May 21st. The stop loss, the entry really is based on a number of factors. One, we have the 50 simple moving average. We have the 50% Fibonacci retracement from this swing low to this swing high. So both those are right here. And this level here 80-20 was sort of established as a resistance level a bit here in March, before we broke down. And it's also been over since, I guess, June 16th, we've seen that level be act a little bit like support. So I thought, in light of the reward risk, in light of these factors, I thought it was worth going long. Also, if we zoom out, we can see it's been a pretty clear, overall, there's been a longer term uptrend. If we look, let's see, take a 1 year look. Yeah, you can see it's been a longer uptrend here. We are above the simple moving averages. And in terms of the stops, well, really, if we break past the lows of yesterday's lows or the lows here on June 16th, then I'd be a little concerned. I put my stop a little below that just to give a little extra room. But the stop is fairly tight. I think 60 pip stop here is enough, and that enables a 5.6 reward risk ratio. So a slightly larger position size, nicer reward risk, which I think made the trade worthwhile. That's about it for me today. Just that one order I have documented on my blog on InformedTrades. If you have any questions, join us at InformedTrades. Share your knowledge, ask questions. Best of luck in your trading, and we'll see you tomorrow. Take care.